edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we are rolling into the end of the week. So let's go ahead and do what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential breakout trades, reversals, turning points, and then a little bit of commentary along the way. If you are new to the channel, do me a favor. There's a little button that says subscribe. Click that bad boy so that you become a subscriber on the channel. It really helps me out a lot. That would be amazing. Let's go ahead and dive right in. S&P, yesterday, I was so angry. I mean, physically angry, like I wanted to, like I thought about punching a baby. No, I didn't really think about punching a baby. But, you know, this is the worst kind of breakout. There was no real news announcement that came out on the breakout. It just, it came down below. And then the very next candle came back up and then came back down. And so we really didn't have the breakout that we wanted. But I want to, you know, talk a little bit today, you know, especially there's this really strong concept around, quote, old support becomes new resistance and vice versa. And I'm going to show two examples today of orders and why a psychological level is important later on. And what do I mean by that? Well, let me give you a quick learn here real quick. And so one of the things that I've taught for forever, if you have sat in any of my classes throughout the years, one of the things that I've always talked about is how an order, how a level, and how an area is kind of created. So let's think about this for just a minute. So, in the world of the markets, if I've got price shooting up, chopping around, and then shooting up again, and it shoots up out of that area. Well, in this area here, where right in there, we had an equilibrium, a fair balance of buyers and sellers, right? And then price moved away. So at this point right here, my sellers had to equal 0, and my buyers had to be greater than 0 in order for price to move away, right? So everybody, and I think if you've sat in any of my classes, then we've probably covered that ad nauseum, right? So remember, so let's say that I have something that looks like this. Well, and at this point, it's very much the same, right? At this point, my buyers equal 0, and my sellers had to be greater than 0. And that is 100% true. No question, no doubt about it. And so what we expect is that the next time we come in, price hits here and goes down. And that's reduced my number of, you know, the sellers in the area. Now, price then comes back and it does something like this. And so this level that we drew in the past can no longer be valid going forward, right? It can't be valid going forward. We don't really even think much about it going forward from the standpoint of what we're going to use, because it's no longer what we would consider a valid area, right? So we would wipe it off. Now, but look at what happens. So we have another area where price collected. This has nothing to do with this here insofar as there's no more orders remaining. And that's what I genuinely believe. However, what we don't take into account is the psychological impact of this in the past. See, when we forget about the psychological impact of this in the past, we're not taking into account any of the orders that have been added. And it's the adding of orders to a prior turning point that will oftentimes cause bigger movements. So sometimes when something is even, when an area is even just, you know, doesn't even work the first time through, like maybe you have something that you're looking at as a potential breakout to the downside below this area here, and price doesn't work, and it just kind of blows right through, right? And it just chops around. Well, later on, that still can act as a resistance point because psychologically it's still valid. Now, why do I bring that up? Well, look at what happens. Look at what has transpired in the S&P, and we're really falling off at the moment. We still have identified the breakout. You know, this is the breakdown level that I talked about yesterday if you were so inclined and wanted to try to get a short. And I will tell you, I was one of them that did. And now I played it really close because I wasn't overly convinced. Anytime you're shorting anywhere near these all-time highs, you've got to play it kind of close to the vest. And I wasn't overly convinced. And so I shot for a little short in here. And I frankly got out at break even because I didn't really trust it. I didn't love it. Even when I got into it, I didn't love it. And so I moved it down, got stopped out at break even. It's one of those frustrating, things, but it is what it is, right? And then, about 8 o'clock last night, we had a huge sell-off. Well, we came and rallied all the way back up to exactly our breakout number. Now, why did exactly the breakout number work? Well, because I drew the line, so that's why the market reversed. No, it's the psychological impact that this was the area that had existed in the past, and we blew right through it. Now, I use bigger time periods, and the reason that the breakout didn't work yesterday was because on a smaller time period there was a bit of a reversal right in here. Right? So if you go all the way down to, say, a 5-minute chart, which I don't really go down to 5-minute charts in the daily market commentary for a very specific reason. I feel like you get stopped out more often than not on these 5-minute time periods. There was this little area in here, which I'll be totally blunt, I would never have picked it. It's in the middle of a gigantic move, and you could have picked this level and this level if you're really doing that. So sometimes you get angry, and I'll be the first to admit when I miss trades on here, because that's part of the reason why I do this. I want you to see how we react to it. But there's nothing else you can learn from it, and what you learn from it is to see the reaction of what's happened now off of that area. And now the S&P is really fallen hard just in the last. Go back to that 5-minute chart. You'll see that we've really dropped. We've dropped 13 points in the last 5, 10, 15, 20, 25, 30 minutes. So the S&P is having a pretty strong sell-off at this exact moment. What's making me more angry is that I'm not participating in it. But anyway, we'll see where it can go. So where's it fallen? Well, that means that today we're going to gap down, and it could be a gap and go scenario. So it could be a gap and go scenario where we gap lower on the open and we continue to run down. Where can we run down to? Well, I'm going to put a little level right here as a potential target for today. I think that if we do a gap and go scenario, we could run all the way down to this region here. We could see a bit of a reversal right there. That would be not an unheard of reversal point. That's where we came down to last night, and that's where we're sitting right now. So, this area we could stall right here, which could actually give you another shot, another bite at the apple to get short if we get a little rally back up. But we definitely have lower swing highs and lower swing lows. And yesterday I talked about the momentum that we're losing on our hourly charts. Nasdaq not selling off as strong as the S&P, so the S&P is selling off much stronger than the Nasdaq. I would not be looking to short the Nasdaq. If I'm going to take a short, it'll be on the S&P. Nasdaq still too close to its all-time high. Now, there's a good possibility that if the S&P gets to that little reversal point, that the Nasdaq might be at this point at the same time. And this would be our reversal point in the Nasdaq, which is the bottom of this strong move higher. So I would like to see confirmation if price comes to here in the Nasdaq, I'd like to see confirmation that the S&P is also in a similar reversal point. Now, this would be the reversal point in the S&P that corresponds with this level in the Nasdaq, and the S&P did already bounce off of this reversal point by about 10 points. So let's see if we do make it down to this region today. It may blow right through this area, so I'm not saying that this is one that I'm going to do a set it and forget it style trade on. I'm going to look at what the S&P is doing when it arrives. So watch the Twitter feed for any updates today if I post those. Crude oil. So let's go back to our the psychological important areas. Here's one that yesterday I taken a look at and said, I think we may get a little reversal off of this on the short side. And look at this, boom, blew right through it. Mama told me there'd be days like that, and so that one sets up for a small loss. No big deal, right? You're going to take losses. So I'll be the first to tell you that losses are part of the game. It's how you deal with the losses that really make it important. Well. But look at what happens. We blew through the area, and then that old area, which we had used in the past, psychologically was still important in the future, and we've rallied up off of that area. So this is just back to what I was teaching yesterday, or teaching earlier in the session, is that it still is a valid area. Going forward for today, I'm going to come all the way up to here. For my next potential on the short side, I'd have to come all the way up to here, and I really like that area. That could be pretty valuable. If you're so inclined, you could probably maybe even look down here for a potential buying opportunity. If we come back down into that region, I'm just not so sure that we will today. Going even to, say, the 15-minute chart. On the 15-minute chart, you have this little area up here, but I'm going to leave that one be because I like the area above it better. Typically, the areas that are a little further away are going to give you a better reward to risk ratio. Looking at gold. So I'm going to move gold out and pull up the 4-hour. I think I found this area yesterday on the 4-hour. Yeah, so that area where we have all this basing, which old support could act as new resistance. And that actually, I think I saw it on the daily, now that I think about it. Yeah, that was on the daily that I found that little region. So I wouldn't be too surprised if we got a little rally back up into there, but that would just continue our downward trend that we've had. Metals have been really, really selling off very, very hard for a number of days, and this is just another opportunity to get short on a pullback into that area. Looking at our bonds and currency markets. So in our euro trade yesterday, that one was a doozy, if you will, as we came down into our euro area, hit it, and then popped up nicely out of that region, traded all the way to the bottom of that level. Depending on how tight you place your stop, you may or may not have gotten stopped out. I think that's a little too much. That's a little too tight to have your stop. You got to give it some wiggle room. Some multiplier of ATR, or however you decide to do it. But that's just a little tuck below. But we got a nice little run off of there, so that one has moved fairly nicely. At this point, I would be very inclined to take your stop, move it up to underneath this area here to lock in some profits and some gains. That's a good one. On the Canadian dollar, we came down into it. I started to feel really good about it, and then I started to feel kind of about it, and I'm feeling better about it again. But I'm not feeling so good about it that I'm not going to move my stop up to break even. Going into a weekend especially, this is a great opportunity to move your stop up to break even so that you've got a little bit of profit built in and allows it to run. So both the Canadian and the euro working out pretty nicely in what it is that they're doing. The bonds, not so much. As price has come down into this area, we thought that we had a pretty good breakout, and the breakout just fizzled away. But the good news about this is that we had this pivot fairly close. So we broke out below, came back up, broke out again. Now you've got a new pivot right up here. So you've really got a very small loss on this kind of position as long as you're placing that stop above those pivots. when you get into those areas. New pivot was formed. So this one did not work out, unfortunately. I thought that we may get a little bit of a sell-off, but we didn't. That did not happen, and we saw the strong rally up in the bonds yesterday. And then in the Aussie, we didn't really have anything set up after our trade from earlier last week. So that one, we had locked in some profit on the one earlier this week, but there's really nothing in here that we're looking at the moment. Pound and yen. We have in our Japanese yen, we had rallied back up to the origin of our breakdown, and then we sold off from that area again. So I can remove these two lines here. Came very close to our entry, but did not get that order filled, so I'm going to leave that one be. Nat gas, we've rallied back up to our short entry, and we did that fairly early yesterday with a pretty big rally back up. I wouldn't be object to somebody doing another breakout short off this little bit of basing that we have at the moment, right through here. So if that's an area that you would be considering getting short on, is if we break below that area, or frankly if we break above the prior area. But like I said, that psychological impact of the area is still valid. So with that being said, everybody, I hope you have a great weekend. We will be back on Sunday for the weekend edition. You don't want to miss the weekend edition of the Daily Market Commentary. We got some fun stuff to cover this weekend especially. So thanks so much, everybody. Hope you're having a great day, and I will see you soon. Later.